Welcome to our Street View episode for April 2018. Today, we've got school scholarships, dog walks, and of course, the Toronto market update. So come on, let's get cracking. Mark your calendars for Sunday, June 24th. Madeline and I are co-chairs of the Pet Value Walk for Dog Guide School. All the funds that we're trying to raise through our community will go directly towards training beautiful young animals like Cashew here that we ran into at the Easter parade last weekend. He's at the Canadian Dog Guide School and hopes to become a caregiving dog for people that have either vision, hearing, autism. You know, they have many service animals. And as a matter of fact, tomorrow we're going to an open house. And then we're going to get some additional footage that we're going to share with all of you and details about how you can get involved. So mark your calendars for Sunday, June 24th, right here in the beach neighborhood. Grab your favorite furry friend and jump in. The deadline for RE/MAX Hallmark's Scholarship Award Program is coming up on April the 20th. We must have all applications in prior to that date, and we're writing testimonial letters on your behalf for your submission. So, hey, hang in there. We're going to get you into that award selection process. And for those of you that are unfamiliar with our program, for past clients and current clients, we have this scholarship award that goes out to eligible recipients, the children of our clients that are attending their first year of post-secondary education. It's yet another way that we want to help your family succeed. Okay, so let's talk about the Toronto real estate market, starting with sales. And they're down 39.5%. So yes, what you've heard is accurate, but you know, as always, there's more to the story. I love these particular graphs because it illustrates not only the orange bar 2018, what's happening now, but we have the 3 prior years to benchmark against. And once again, when we compare to 2017, there's a dramatic difference, and that's where that 39.5% comes from. But we can see it's actually trending below the 3 prior years. So, you know, it's like, what's going on? There is some seasonal curve to it, but you know, the stress testing for mortgages, the Fair Housing Act and the ripple effect of that, the rise in interest rates, or is it a shift in buying behavior that people are now saying, we're taking a step back? And maybe this relates very well to the number of listings coming out and how price is behaving, and the answer is yes. So let's get into that section. The number of new listings represents the supply side of the equation, and for the month of March, they were down 12.4%. Now, when we look at the seasonality of that, we can see how the number of listings always increase in this time of year, but when compared with last year, it's actually down 12.4%, which actually is the first month this year where new listings have been lower than they were last year. Last year, we had a tremendous shortage of listings. So while this represents the number of new listings coming to market, it doesn't show you the complete picture. It doesn't talk about all the listings on the market. And what does that look like? It's actually double what it was last year. That's right. So you take the total number of listings that are on the market right now, it's actually up 103% over the same time last year. And that's that whole supply-demand thing. And no wonder price was going so high last year, that we'll get to see next. But this is how we understand it. It's really basic fundamentals, supply, demand. We got an increase of supply, and demand, I think, from the number of sales that have taken place, has taken a step back a little bit. So now the net result is price. For the month of March, it was down 14.3% for the average home in the GTA area. So let's break that down a little bit. We can see how the orange bar is well below the 2017 bar, that's the 14.3%, but it's still well above the 2016 and 2015 average price numbers. And we'll also note that it's following that seasonal curve, where price typically grows a little bit as it comes into the spring season. So I would say everything is performing normally. Certainly the number of transactions are way down, but the inventory is near double. So price growth is very moderate. The other thing I would point out is that we're headed for this convergence. Because we had a run up in price in 2017, we can see how the orange bar and the yellow bar are they're gonna converge like that as we get into April, May, June. And I would say towards the end of the year, we're going to start talking about how price is up a little bit, moderately, but I think price will be up a little bit. I think that the mood of the market is pensive and a little bit cautious. I think that's the word of the day. I think that's a good one. So now how does that break down to the different home types? And I know many people love this slide because we can distinguish between the 416 and the 905 and for the different property types, right? So we're going to focus over here on the right. We're going to look at the 416, where the majority of folks are watching from, and we'll see how detached homes are still down a little over 17% year over year, right? The average price of a detached home last year at this time was at its peak a little over 1.5 million. And that's a completely different price category. And it's even today, that price category is still relatively soft. So the price coming down now to just a little bit over 1.2 or almost 1.3, it's good opportunities. When we look at the 905, it's a little more significant because the price growth there was a little more significant year over year. I think we talked about that last month. But now when we go down to the bottom and we look at condo is up 7%. Even though the entire market's down 14%, condos are still up 7% year over year. And that's part of the affordability dynamic, that the lower price points, anywhere from 600 to 900,000, there's still a lot of affordability there and a lot of people pushing price higher. Even in this market where all these other things are going on, that's still happening. And once again, this idea that the gap between owning a condo and owning a house has kind of shrunk a little bit. We can see how detached has taken a fairly significant hit in the 416, but semis are just a little over 5%. So that gap is closing. And the jump there is going to be, I think, finite over the next 3 months. And certainly we're helping some clients realize that right now. Great time to be in the market making that shift, if you happen to know of anybody. Anyhow, the last insight I'll share is this. When we talk about all these numbers comparing to 2017, if I wind back the tape 12 months ago and I was standing here telling you about price growth for those different types of property class, I would say this. I would say the average detached home in Toronto has gone up 32.8% year over year. Yeah, 32.8%. For semi-detached, it would be 33.3%. For the townhouse, it'd be 22%. For condo, 32%. So you can see, even though maybe we've backpedaled the 17% or 5%, et cetera, it's still monumental growth in the overall scheme of things. And that's where the skepticism comes in for those people that believe that a housing correction is still yet to come, like a real one, like a big one, like a generational one. I'm not so sure about that. The demand seems to be cautious, and the supply is much higher. With rising interest rates throughout the year, I think that it's going to keep price moderately low, which will give Canadians or Torontonians an opportunity to increase their earnings to help with that whole affordability dynamic. And since we're going into an election year, who knows what's going to happen. But I trust you enjoy these insights. As always, Madeline and I are here to serve, and if you happen to know of somebody that wants to make this jump from condo to housing, I can't really see a better time than now, honestly. So with that, I'll look forward to speaking with you again next month. Take care.